welcome back to another episode of New Foundations. Joining Bobby and I this week, we have Brad Myers, a partner at Early Riders, and we're excited to bring guest Glenn Cameron on the show from Cartwright. Glenn, I think it's great place to kick off, just going over your background and your journey to Bitcoin.
I've kind of been all over the show, kind of life has led me, but I started off as a fixed income trader. I was trading bond futures on Eurex here in London. And then I had to get a real job. That's a long story, I'll tell you sometime. But I studied the CFA while I was trading. Traders like volatility, and there's not always volatility. So I studied on the quiet days, and because I kind of knew that it wasn't like a long-term thing, trading. And so then I became an institutional investment consultant. It was actually a US firm, but they had like a European office here in London. Basically doing investment consulting for all types of entities. Actually, funny enough, no British entities, even though we were based in London, but European pension funds. And I had one sovereign wealth fund client, was the State General Reserve Fund of Oman and the Central Bank of Egypt. And then after that, I moved back to South Africa, to Cape Town, and was the head of investment consulting at a firm called Old Mutual. And it was mining rehabilitation trusts, what you guys call foundations, I guess, but over there they call charities and pension schemes. Yeah, and then I was then I became a portfolio manager at a company called Sanlam International. And then my most recent move is to Cartwright. When I was at Sanlam, I kind of volunteered to help the private wealth division. They were basically getting requests from clients to get access to crypto assets. And I kind of went down the rabbit hole and kind of figured out the difference between crypto and Bitcoin. And then kind of set up all the infrastructure around that and everything, custody and execution and education and all of those kinds of things. And then when I interviewed here at Cartwright, the director of investment consulting was looking for somebody who knew a lot about Bitcoin to kind of lead that area of the business here. And so I do my normal investment consulting work, but then I do quite a few things related to Bitcoin. We're involved in Bitcoin mining ventures here in the UK. We're doing Bitcoin employee benefits. We're doing stuff around cross-border payments, just portfolio allocations and, education, investment consulting around that kind of normal stuff. So I probably spend half of my time doing Bitcoin related stuff, and then the other stuff is all just, traditional, investment, kind of financial market kind of stuff. Yeah. And then we have an outsourced corporate treasury division where we basically manage corporate treasuries for SMEs here in the UK. And obviously there's a Bitcoin angle there too. So, yeah.
Great. Thanks, Glenn. That's very helpful.
Yeah.
Before we jump into some of those more treasury specific topics, curious if you and the group have any reactions to the current liquidity frenzy that's taken the world by storm the last couple days.
Yeah, well, so I mean, it's the usual story, right? It's like if you give a 5-year-old, 3 Red Bulls, he's going to run around like a lunatic for a while and then get in a very bad mood and throw a temper tantrum, right? And I mean, in the US, so if you just do some simple financial mathematics, so you take, the government's financial statements, the equivalents of their balance sheets and their income statement and whatever, and you kind of put it in there and you make some, reasonable projections, basically just trend analysis, and you just kind of compound the whole situation. You realize that by 2035, unless they debase the currency, which of course they will do, right? Because you can never not pay your debt if you can just create money out of thin air. The whole thing's bankrupt, right? If they don't print money, right? And it's exactly the same in the US. And so, but we still kind of live in this weird world where, there's not really an acknowledgement that is the playbook. So we kind of pretend that we're controlling inflation and we've got it all under control or whatever. So we tighten monetary policy. And there's all these games with leverage. I mean, the whole carry trade with Japan, where you're borrowing money at close to zero and then transferring it into dollars, hedging out the currency risk, and then investing the money. And then all of a sudden, whoops, the game's up because it looks like the Fed's going to cut interest rates. The Japanese central bank raises rates by 15 basis points, 0.15%, and the market has an absolute panic. The yen strengthens by 20%. So now you've got to pay back yen in a strengthened currency, and everybody's just leveraged up to the hilt. And so there's, everybody's looking for liquidity, because when you need to pay debt, you've got to pay it with liquid money, right? So now it's like, oh, yeah, I've got all these assets. I've got to sell them. I've got to kind of reverse all this leverage and get back into the right currency and whatever. And then also we've got a bunch of wars also funded with printed money going on. And there's a lot of uncertainty in the world right now. So everybody's kind of on edge. Kind of everybody kind of knows we're close to, this latest round of this big game that I've been describing being up. So it's like, oh, is this it? Right? And then panic, and then try to be the first one out of the door. And then you see, oh no, actually this is not the big one. Okay, so now we'll just all kind of slide back in there. But actually, let's take some risk off the table, getting close. But, and maybe this is a buying opportunity, So, yeah, that's kind of my breakdown of what happened yesterday.
Appreciate that. You hit on a crucial point, which is during these times where the fragility is most on display, where there's liquidity issues and you're facing potential margin calls, you're not necessarily selling what you no longer believe in, you're selling what you can, especially over the weekend, right? Where Bitcoin trades 24/7, 365, all traditional markets were closed. And when you're facing this, it's not that you no longer believe in Bitcoin, it's that you need to raise cash any way you can to not face that margin call because of how much leverage is in the system, right? So that's a really important distinction. I don't know about you guys, but I received multiple texts from friends saying, hey, isn't this when Bitcoin's supposed to shine? Why is the price crashing? And I think this dynamic is what causes some people to delay their timeline of taking Bitcoin seriously and starting to study it, right? Because intuitively they think it should be reacting very favorably right now, which is understandable at a surface level. I'm sure you guys have some other thoughts on this topic as well.
So I think there's a couple of things going on. Everything you said there, I agree with. The other thing is that, not everybody's a Bitcoin maxi. So you got a lot of new players in this space. And like, for example, hedge funds, right? I don't think they really have the kind of conviction that we do in Bitcoin, right? They kind of see it as a sort of, they see it as a risk on asset, right? So, when things like yesterday happen and in, market sentiment shifts, they want to take risk off the table and they want to take it off quick, right? So it's, generating liquidity to get rid of leverage. They're also often trading Bitcoin on margin, right? So, and you also have a lot of entities, as we've always had in Bitcoin, that kind of, when the time comes, can't meet collateral calls, so they get automatically closed out. So that kind of exacerbates the crash. But also think that Bitcoin is a trader's dream, right? Because traders love liquidity, right? So, and when love volatility. So, when things happen like yesterday, everybody panics and they sell and whatever. But ultimately, you're right. I mean, nothing's actually changed, right? It's just human behavior. It's just fear and greed, right? So it's a buying opportunity, right? I've kind of orange built the whole company here, and I had people calling me yesterday like, "Oh, what's going on?" and whatever. I was like, "Buy, and today it's already up like 15% or whatever. It's kind of recovering. I mean, if you think about it, it was very similar to what happened in March 2020. Like, we were trading about like 8,500, kind of dipped down to 3, right? And then the money printers, came on full steam, and then, it was off to the races, right? Then, they tightened monetary policy, and, everybody's like an earner yield in inverted commas and whatever, and obviously we had the FTX and all that kind of stuff. But, the long-term thesis doesn't change. I mean, everybody kind of knows this stuff in equity markets. Nobody's going to, the equity markets drop, some of them dropped 3%, Nikkei dropped 13.5%. Nobody was dancing on the grave of the S&P 500 or the Nikkei yesterday, but I had a few people dancing on the grave of Bitcoin yesterday. So, but it's just ridiculous, really. It's just naivety. People don't really understand what they're talking about there, or they're prejudice. They kind of want to be right about Bitcoin being nothing or whatever. Honestly, don't know what they're talking about. So,
But Glenn, I think you anchored on a really important point that Bitcoin's incredibly good at, again, sniffing out every macro event. Like, whether even agnostic of liquidity issues, it also sniffs out global political tensions. I remember being, when the Russia-Ukraine, event happened, and you saw massive spikes. And so it is this incredible feedback loop of global communication, but within a monetary asset. And so I think when I kind of look back on whether it was reverse repo freezing up in 2018 and all the way up until obviously the March 13th, 2020. I remember exactly where I was that day, the 50% drawdown, which was gut wrenching, but at the same time, a generational buying opportunity. And then you go even further, FTX, all these other different events, and whether they're wars or whether financial liquidity issues, it sniffs it out very quickly. And even over the weekend, I was with some non-Bitcoin, individuals, business owners, successful folks within commercial real estate, retail, whatever it might be. And on Saturday, it was clear something was happening. It was clear, you could feel it building. And again, I think, once, landing back, on Sunday and seeing Bitcoin just, gap down, you knew that, again, Monday was going to be a brutal day. But at the same time, again, I think we're in this part of the cycle where it's not uncommon that you get really that kind of bull market pullback that really tests, again, a lot of the new entrants who have entered that market. And I think even for businesses, going back to kind of, how this might impact businesses, is if you're a well-run business and you're seeing an opportunity like this, and again, you're finding the opportunity to maybe add it to your treasury asset, or at least your balance sheet, what a great opportunity if you have your plan, you're sticking to it, you have some excess liquidity, and again, you're running a good business that's cash flow positive. Well, hey, Like you just got, I mean, what is it, down 20% plus, an 8%, push up, a huge discount. It's an unbelievable asset from that perspective. So
Yeah,
Yeah.
100%.
One interesting thing, like the the whole yen cash and carry trade. I'm not a legacy finance guy where, I understand that at first take, but then you read about it for 2 days straight and you're like, okay, I see what people are doing. And the interesting thing, just from like a simple, like layman's term in my mind, is these financiers and like these smart people out there, they're seeing again and again, if I borrow money from another currency and interest rates move a teeny bit, it could collapse everything I'm doing. Does that feel and seem rational? Well, yeah, because we've always done it that way. But when it happens again and again, it kind of puts you back in your seat. And these guys that do, futures and commodities trading, it's not too native to just be, okay, Bitcoin is another asset. So rather than taking out, these loans and using leverage, maybe we do just hold Bitcoin. And I think, a lot of folks say, wasn't Bitcoin supposed to respond this way at this time? And the thing is it's not anywhere near as bad as it could be. And people are overestimating how bad it is. Sure, 2 trillion wiped out is pretty bad, but that's not much compared to what is going to happen. And when that does unhappen, like whatever the real unwinding is, that's when it's going to be max pain and it shoots up for these like God candles people want to speak about. But the good in this is it's just another point in time where it's another timestamp where, hey, it fell 10, 15, 20, 30%, 9 months from now, it's back up. And it's a reinforcing mechanism in people's minds that this thing isn't dying, but the thing that is dying are these other currencies because there's no way to truly revive them. Bitcoin's a free market and it just constantly revives itself because there's network effects. Other currencies, you can't revive them. All you can do is destroy them. And I think that little bit right there is going to be ingrained in people's minds over the next 4 to 5 years.
Yeah, definitely. I mean, look, the thing is, even though it's probably 1.2, $1.3 trillion asset, right? It's still small, right? So like, there's two ways to define liquidity. So you've got proper illiquid assets like a building or whatever, right? You can't turn that into cash very easily, right? But the way a corporate treasurer defines liquidity is, can I turn this thing into asset with no loss of principal, right? Bitcoin is liquid in that sense, right? Particularly when you have a big market event like yesterday, right? Because everybody's trying to exit at the same time and there's just not enough buyers, right? So you're going to take a 10, 15, 20% haircut to get out, right? Unless you get your finger on the sell button, and you're the first one out the door, right? But the thing is that, so the way I think about how a company should think about it is, okay, you need your operational working capital, right? You need like some kind of buffers, right? Because unexpected things happen, right? So let's make some reasonable assumptions around that, right? And then you've got capital that you're just hanging on to because you know what's crazy about this whole way that companies operate about like they just they don't want to hold on to cash, so they just pay it out in dividends or buybacks or they got to buy something, they got to acquire something or invest in something, like growing their business, right? So that part leads to a whole lot of capital misallocation. But the part where they're just paying all the capital out of the company and it's literally gone, that's no longer their capital, right? So it's like an individual who doesn't save, right? You just get money in and you just kind of go outside and just hand it out, right? And then, then the rainy day comes, right? And now you got to borrow or you got to beg or you got to, go bankrupt, right? You can't have a rainy day fund because you can't sit on a whole bunch of cash. Well, a lot of companies do, but then, that's expensive, right? So the thing is, you need something to store your rainy day fund in, right? And your rainy day fund, you want something that's, okay, what's for the first year? Let's say it's a long rainy day, right? Or you kind of need capital that's going to allow you to kind of retool your business. Like, let's say the whole industry that you in gets disrupted by AI or something like that, and you've got no capital, and let's say at that time it's very expensive to go to capital markets, your valuation is low, so now you can only issue equity in a dilutive way, or interest rates are high, or you've got no easy options, right? And at the same time, you didn't want to hold on to capital because it's expensive to do that. So that's the sort of place where I think Bitcoin has a role, right? Is you need to have kind of a 4-year time horizon. You got to kind of have stacked everything else that you might need, right? And then that surplus capital is what you're kind of sweeping into Bitcoin on a monthly basis. And that's kind of your hedge against, what we've been talking about, which is the long-term future for sure. I mean, it's just maths, right?
Yeah.
It's coming.
Another thing that I've always viewed it as, Glenn, and I think this just is me coming from my background and again, building businesses, and again, I think just excess productivity. So I always viewed, again, end of month P&L, what do I have left over that we've created in excess in terms of the value that we've generated relative to the costs, and how do I want to store that? And so, like, again, the options, as you mentioned, are pretty limited. It's like holding cash. Again, that can be expensive. It's melting ice cube. Do I go, again, engage in some, again, money market fund? Sure. Yeah, there's fees associated with that. And then I kind of view it as, well, if I have a 4-year time horizon on trying to store excess productivity from today into the future, well, I can't really think of a better place to put that than an asset that is completely immutable, hard capped, and has the network effects, again, of the internet, and the tailwinds of debasement. So I think it's one of those things where, as businesses, again, owners, and again, really start to grok, again, just the mutability of Bitcoin, I really kind of expect them to take their own different lens to it. And I know for me, it's, excess productivity. How do I store it over the long term? No different than my personal balance sheet. And I, certainly think that some of the more complex treasury solutions that are out there will really probably fall to the wayside, given how simple and cost effective it is to ultimately hold Bitcoin for longer term, time frames.
Yeah, I love that, Brad. It's like these more complex methods, right? You're doing a little bit of everything. You got some cash, you got some treasury bills, you got some money market funds. You're deciding how much to use for acquisitions, buybacks, etc. You're doing all these things that mask the fact that each one of them is coming up short. So that excess productivity is a great way to refer to it. It's really like a savings beyond your working capital needs. To Glenn's point, you don't want this to interact with your working capital, because yesterday there may have been companies, if they were doing that you're selling at the worst possible time to cover payroll, right? But if you have that savings mentality, then you benefit from the fact each one of these events, each one of these big macro events that Brad was talking about, if you wait anywhere from a couple days to a few months, it's always led to more stimulus, an expansion of the money supply. And that's really where Bitcoin shines. It's not the day of the panic, it's the response to the panic. So yeah, I mean, I think we're all cutting into the same exact message from different angles, and which is great. Glenn, I'd love to hear about what Cartwright is doing on the Bitcoin treasury side for corporations when it comes to cross-border payments, when it comes to employee benefits. Would love for you to touch on that.
Yeah, sure. So I'll tell you a story to lead into it, right? So we were actually looking to bring money into the US. It was a decent amount of money. It was about £1.5 million, and the trustee's bank account was with Barclays Bank here in London, and we asked them to quote us a rate. And when I looked at the spread to the mid-market rate, it was 2.6%, right? And it was going to take, they said, anywhere from 24 to 48 hours to get the money from here to there, right? So 2.6% of £1.5 million is £39,000. Okay, for what? Right? For going buy dollars, send to this account, £39,000, right? And then I've got to wait 2 days for the money to get where I want to get it to, which is just crazy, right? So what are the options? Well, you could use stable coins. You could probably get it there in 10 minutes. But the problem with stable coins is you've got a counterparty there, right? And yeah, 99,999 times out of 100,000 times, everything's going to be fine, right? But there's a chance that something's going to go wrong. And if you can do it without any counterparty risk, and you can do it even quicker than 10 minutes, say instantaneously, then obviously that's going to win, right? That little marginal improvement is, why would you go for second best, right? So I was traveling and I was reading the River Lightning report. I was cheap as these guys. I mean, everybody's focused on remittances, right? But the B2B kind of payment market is like 98% of cross-border payments, and nobody's. So it's like, why aren't businesses using the Lightning Network? And started looking into it, and obviously the problem is liquidity, right? In the channels. So you can't kind of move £5 million through Lightning channels, right? But so I'm kind of under like an NDA or whatever, so I can't mention names or whatever, but essentially we've been working with a Bitcoin payment technology firm to kind of solve that problem, right? So have like directly from one Lightning node to another, and have enough liquidity to move like millions in kind of one fell swoop, almost instantaneously. We all know how fast the Lightning network is, especially if you're just going one node to another. You're not kind of finding a pathway through a whole bunch of channels. Can do it in a tenth of a second, and you're just really using the Bitcoin ledger as like kind of as a ledger, essentially as a global ledger. And then you just need liquidity on both ends, right? So you need to be able to, well, you already have the liquidity in the channel, but you need somebody to pay out the cash on the other end, right? And go from one fiat currency to another, right? And then plug that into a corporate treasury strategy. And then I can definitely tell you about this part. We formed a partnership with, I'm sure you guys all know of them, Fortress. They've got like this, the thing with Bitcoin is that if you want to hold Bitcoin in a proper, corporate treasury where they're using like a treasury management system or whatever, that thing can't read the Bitcoin blockchain. So they've kind of built a, nifty API where you can kind of read the Bitcoin blockchain and essentially bring that into your treasury ledger, right? So you can hold it along with all your other assets in your normal corporate treasury management system, then plug in the ability to now kind of move money around the world, literally at the speed of light. And you can imagine what that does to working capital, right? If you're a multinational and you're constantly moving money around between like 15 subsidiaries or whatever, and you've permanently got capital tied up in the SWIFT system, and now all of a sudden you can, sorry, I can see I've kind of lost the light's gone really bad for the sun. Let me see if I can fix the problem. Yeah, I don't know. It looks like I'm on one of those crime shows where I'm trying to hide my identity or something. But yeah, so just like, not having all that capital tied up, the fees on it will be, a quarter of what the banks will be. And it's crazy that in 2024, we've got AI, we've got all these mad things, right? And it still takes like 5 days for me to get money to Australia, right? And we've got a perfect solution. So we just want to, it's difficult. I mean, we're still trying to figure it out. Right? I'm not saying we're there yet, but we've come a long way. We're hoping that within the next kind of 6 months or something, we've tasted the technology, right? All the technology, obviously, well, it's just the Lightning Network, really. But we're building kind of a front end to it, and to make it super easy. It'll be literally like somebody logging into their online bank account, like a finance team in a company, and saying, send 3 million quid to this bank account. Obviously, then there's all the regulatory licenses and permissions and compliance and, the travel and da-da-da. So, that part of it's really expensive. Setting all that up and creating partnerships with liquidity providers and all of these kinds of things. But it's mostly not me doing it. I'm just kind of playing an advisory role, and then we're going to be the sort of UK partner for the company that's doing this. And so that's what we're doing in that space. And then the other thing that we're doing is we commissioned a Bitcoin technology company to build Bitcoin payroll technology or Bitcoin employee benefit technology for us. It's software. Essentially, the way it works is it's also meant to be super user friendly. So it's just like in a web browser. The company has kind of a login and two-factor authentication kind of thing. They log in, they take like an Excel spreadsheet with Bitcoin wallet addresses and amounts in each Bitcoin wallet address, all their staff, right? And then they load that into the system, and then they just make one payment to a Bitcoin liquidity provider. And that liquidity provider is Lightning enabled, and it hits the account, and an API kind of constantly checks the account for money, turns it into Bitcoin automatically, and then sends it to the company's own Lightning node, right? But they don't even really know they've got a Lightning node, right? And then the software automatically pays out to all the staff's Bitcoin wallets, right? And the idea there, so, I mean, for example, so when inflation was really high recently, here it was CPI was 13%. God knows what the real inflation was, right? 95% of people maybe didn't get a 13% pay rise, right? So everybody really got poorer. And the fact of the matter is that companies can't afford to give people 13% pay rise because they can't raise their prices by 13%, right? So there's really no easy solution here. Unless what you do is you say, you know what, we're going to give you a bit of Bitcoin, hang on to it, and that'll compensate you. Right? Because as the value of that rises, it's going to compensate you for what the real purchasing power of your salary is not keeping up with, real inflation by. And so we kind of encouraging companies to kind of, get people going, like whatever they can afford, say, it can be 50 quid, can be 100 quid, whatever it is a month, on top of people's salaries, right? And kind of pay the tax on portion of that on their behalf because they've got to pay income tax because, it's a benefit in kind or whatever you want to call it. But then say to staff, hey, if you want to get some of your after-tax salary in Bitcoin instead of in pounds, just let us know the amount and we'll just transfer that along with the one payment, and you'll just receive it automatically in your wallet every month. And then obviously, if you go to a company with a few hundred people in or whatever, there might be a handful of, Bitcoin aficionados, and the rest are not. They're going to be clueless, right? And so we're putting together like short little education videos, just like one on like very the bare basics of Bitcoin, then just like 10 minutes, and then also like how do you receive it, and how do you look after it and whatever. And so we kind of done a partnership with BitKey for a user-friendly kind of hardware wallet solution, although there are trade-offs there obviously. But then also we're partnering with a Bitcoin advisor to kind of help people do collaborative custody, similar to what Unchained do, and they formed a partnership with this company, I want to say Dallas or something like that, where they've got this. It's a collaborative custody solution, but I think the user holds a key on their wallet, and it's kind of like to make it like there's no friction, so that people don't have to buy hardware wallets and whatever, but it's pretty secure and whatever. But obviously we'll give everybody all the options. But a lot of people, when you start talking about cold cards and stuff, it's just too much, right? Especially people who are brand new. So you got to kind of step them through the options and say, if you're that way inclined, here's a really cool video explaining to you how to do it. But if you don't want to, there's other options, easier options like BitKey or whatever. So those are the kind of two things that we're trying to do. And the Bitcoin technology company that we're working with, they do merchant payments. So the merchants can receive Bitcoin payments, and they also got like an kind of commerce kind of solution, so that people can pay for with Bitcoin online. So what we're trying to do is kind of create almost like a circular economy a bit as well. Like, so when we kind of get a big company or whatever to do Bitcoin employee benefits, then we'll go to all the companies around that company, or all the shops around that company, and say, hey, you guys should enable Bitcoin merchant payments, because this big company over here, all these staff are getting paid in Bitcoin. And we'll tell them that this shop, that shop are kind of where you can spend some of your Bitcoin if you want to, but obviously don't spend too much of it. Hang on to most of it.
Right.
Yeah. So those are kind of.
You hit on a couple of important points there.
Yeah.
One of them with the cross-border payments. It's amazing to try to think 50 years from now how they'll look at our current operations and be so confused. How we have AI and we have all this different technology that's just disrupting the world, yet it's much easier for a business in El Paso, Texas, to send a payment to someone in Washington State or in Maine than it is 10 minutes away across the border in Mexico. This really, when you think of it, this is not going to last all that much longer, and it just really doesn't make sense at a fundamental level. And then secondly, on the incorporation of Bitcoin into compensation and benefits packages, you hit it nail on the head with whether you're a business or an individual, you're getting squeezed. Your costs are increasing at a rate higher than if you're an individual, your salary is going to grow, or if you're a business, the rate you can increase your prices at. So the only solution, if you take a step back, is to save in a scarce asset, to try to bridge that gap and make the difference. So appreciate those thoughts, Glenn.
It's something that's so liquid, Joe. I think can you imagine the headache of running payroll for like Deloitte? Like what that would look like? It'd be insane versus again, if you're able to have these Bitcoin benefit programs where here's a wallet address and it's something as simple as that. And not to mention, when you talk about Joe saving in a scarce asset, everybody's getting squeezed. Good luck sending a stock certificate of a GLD, across, the internet. It's not going to work that way. So this asset's meant for not only, again, we'll call it those cross-border large scale, possibly even, again, base chain. I know we talked a little bit about Lightning, but huge chunky payments, on base level. but then also again for individuals that want to take a portion of their paycheck and actually be have it delivered in Bitcoin. And I think those are solutions that are very much a use case and can help just alleviate some of that stress that's put on through debasement that no one else can really control by 6 or 7 people sitting in a central bank. And to me, that's like the powerful thing is it not only helps the big guy, but at the same time, like it's meant for the individual as well, which you don't find solutions like that are that simplistic, but yet have the utility for both sides that are just as meaningful.
It's also like just getting Bitcoin into people's hands so that they can, like we do like training events for like pension trustees and whatever. And always, all of them, I always get them to download a Bitcoin wallet and give them all a little bit of Bitcoin. And it's, everybody's like a little kid. Their eyes light up. They're like, oh, wow, I finally got some of this thing that I've heard so much about. It's the experience of receiving Bitcoin. And then, but also the experience of holding it and seeing what happens and going through that journey. Everybody has to go through that journey of like, oh, it's up 30%, look, oh, let me buy some more. Oh no, damn, you got to start that journey somewhere, and you got to have skin in the game, right? Because you can sit in the peanut gallery and throw peanuts, right? Or you can actually hold the asset, and now you care, right? Now you want to learn about this thing. Now you want to understand this thing, especially when it does what it does, and you're like, okay, no, I've got to know why is this happening? And so that's kind of what we're trying to do. I mean, I think you guys got it, and you're seeing it in your current election cycle, right? Is you've got that probably larger than intransigent minority where essentially if you've got like say 10% of a population that believe in something, like you think about your political system, that's the swing vote, right? So it's like those guys are now deciding elections, right? In the UK, I don't think we're quite there yet, right? And so we want to kind of, spread the orange to enough people such that enough people care that when the vested interests in the current system kind of get ideas in their head, the electorate go, no, we're not having that. We're gonna, give the power to these other guys whose interests are aligned with ours. So like, how do you do that kind of in a, as make a contribution to spreading Bitcoin in a way that's not, I mean, I would like to do one company at a time rather than one person at a time, right? So that's the idea. We don't know how it's going to go, but we're going to give it a go and see what happens. Yeah.
I liked what you said about getting it in people's hands and the process started, because the reality is if you hold 0 Bitcoin, subconsciously you're biased towards thinking it's not a legitimate asset or network. And if you only have even just like $10 worth of Bitcoin, it shifts something in your mind where now you're a little more biased towards, well, maybe this is legitimate. Let me look into this. It really makes such a big difference just having even the smallest step on the boat.
Right. So I'll tell you a story for fun, right? So there's this trustee of this pension scheme. He's like the chair of trustees, and I've been trying to talk to him about Bitcoin, and he always just shuts me down. It's just like, no, I'm not having it. So I decided to take him out for lunch. And I did have some legitimate, actual normal business to talk to him about. But, I really wanted to talk to him. I wanted to get him where you couldn't run away and talk about Bitcoin. And so I told him a whole bunch of stuff. But what got him, right, was because he said to me, which I found kind of strange, he was like, you know what, Glenn, I don't want you to come and talk to us about Bitcoin. I want you to come and talk to us about AI. Right. So then I started telling him about the links between Bitcoin and AI, both on the energy side, but also in terms of the payments, like micropayments and AI agents paying each other and everything. And so then he said to me, that's interesting. right? So I'm going to go talk to all these trustees about Bitcoin and AI next week. But what I want to say to them is, it's a cliche in our world, is, the only wrong allocation here is zero, right? Because if you're wrong and you got zero allocation, right, that's going to cost you. So it's a similar story to what we're saying about just getting it in people's hands. Okay, so what? If 5% of your portfolio is too much, is 2%. If 2% is too much, is 1%. Is 1% too much? Okay, let's go for 1/4%. Let's get some of this in your portfolio. Let's show you what the process is like. Because that's how it started for me. Like the first time I bought Bitcoin, I bought like the equivalent of like $2,000, right? I wish I'd bought more, right? And everybody's got a journey to go on, right? I often forget when I'm talking to people that you're not going to get somebody from where they are to where we are in one step. They got to go on that journey, and it's quite a long one. So, yeah. And like when in terms of corporate treasurers, right? I think that's the way to think about it. Right? Like rather than coming to them with our perspective on the world, come to them with their perspective on their mind, right? And talk to them about the things that they care about, right? And talk to them about the things that you can do for them in ways that they're already comfortable with, right? But then show them that, oh, you know what? If you want to compensate for how you're getting this capital's getting diluted, right? And you use gold or you use equities or what, you can kind of do an asset allocation and show them the expected return. How much of their corporate treasury are they going to need to put in equities? It's going to be like 20%, right? They're not going to be comfortable with that, right? But if they put 3% in Bitcoin, right, it's going to do as much as 20% in equities, right? And if you show them the difference in the expected volatility of the two portfolios, but it's a tough one because you got to have people's trust.
Yeah. At Acropolis, we're excited to solve that puzzle, right? Speak their language and help them understand, you need to take a step back from the fiat volatility and look at the fact that the worst 4-year CAGR for Bitcoin possible, like if you pick down to the day, the worst 4-year CAGR is right around 25%. And then you start looking at some of those moving averages over the course of years, and it really changes the picture. But any last thoughts before we wrap, guys? Glenn, this has been a really great convo.
Glenn, maybe just a question for you, just again, kind of maybe round it out on the pension side, because I view it as a huge issue. And again, I know that, again, there's a lot of, you're in the room with a lot of these folks who are allocating and, again, advising them and things like that. And so I look at, even just on the U.S. side where, and I reflect a lot of my time back at, formalized consulting companies who have pensions. And my father-in-law was a partner at one of the big four and a couple others. And again, that keeps getting trimmed and trimmed and trimmed. And so, I would just be curious, like, again, like kind of where do you see like maybe more of those more progressive folks, going? Do you think that they'll, be adopting it first, knowing that, again, like they have good businesses, but again, they have highly competent, we'll call it pension receivers, that will likely be like, what the heck is going on? So I'd love to kind of maybe if you can, for the last, couple minutes here, just paint the picture on what you're seeing from the pension side, what are the gaps, what are people seeing, what are the hurdles? Would love just kind of like overall point of view from that perspective.
So where I think you can win in the pension, because, so there's always trustees involved with pensions, right? And you got different types of trustees, right? You've got employer nominated. So the company kind of says, we think the financial director of the company should be a trustee on the pension scheme, and we think this guy would be good, or this would be good, right? Then you have the member nominated trustees, which is the members of the pension scheme vote, and they say Joe would be great to represent us on the pension trustee board, right? And then, not on all pension schemes, but on a lot of them these days, you have professional trustees, right? Which are, they basically don't work on one pension scheme, they'll work on like 15, right? And they sit on these trustee boards, and they generally come from either an actuarial or investment consulting background, and they kind of switch over when they get a bit old and gray, and they sit on the other side of the table and quiz the investment consultant and, kick the tires and whatever. So the issue is that, are people thinking for the pension scheme, or are they thinking for themselves, right? So in the case of a professional trustee, they have a whole career and a reputation, this and that. So these are the kinds of guys that you generally tend to find are, whatever the sort of big narratives are, they're on board, right? So, because it's good for their reputation, it's good for their career to kind of toe the line and be, in the mainstream, right? And obviously, Bitcoin isn't going to go down well with that crowd. Right? It's like, it's too controversial at this point, right? I mean, I'm not saying I don't try, I certainly do, but my experience is you can't put your finger on what exactly the problem is, but I think it's because they're not telling you what the real problem is, which is what they're thinking is, I don't think this is going to look good for me if I'm the guy who's saying, yeah, let's put Bitcoin in this pension scheme, right? So you want to kind of steer away from the pension schemes with professional trustees, and you want to look for the ones with, just lay trustees, right? And they're relying on you for advice, right? And then then within that pool, where you win is with where the company whose pension scheme it is like kind of blue collar workers and like manufacturing and stuff like that. Why? Because of what Joe was saying. Because those companies are getting absolutely killed, right? Their margins are getting squeezed. They can't work out what's going on or whatever, right? There's a car parts manufacturing business. They've got a pension scheme, and their whole board is like just people who work in factories and and like even at the trustee meetings they're like in blue overalls, literally, right? And I explain the history of money and what's going on and where inflation really comes from and all of this. They totally get it straight away. And then I explain Bitcoin to them, they totally get it, right? And then I say, are you interested? And they're like, yeah, we're interested. And they don't care what anybody thinks. They don't need to worry about anyone thinks. In fact, nobody even has to know because it's none of anybody's business. It's their pension scheme. They can do whatever they want. So I would say, particularly in a place like the States, if you can find those companies with their own pension scheme, with those kind of characteristics, and not these kind of bureaucratic kind of professional kind of types that are kind of, the type I'm talking about, that are kind of worried about their image and their reputation and all that, because then you've got to deal with all of that kind of stuff. And it's got absolutely nothing to do with logic or the Bitcoin thesis or anything like that. That's just like another agenda that, what can you do about it, Yeah.
Absolutely. That same mindset is pervasive on public company boards as well. And that's an impediment we're going to be knocking down, is that status quo mindset. Those who need Bitcoin the least are typically the last to take it seriously, which is partly, one of the beauties of Bitcoin, but at the same time, an impediment that we all need to come together and knock down together. So
I think what we do is go after all the low-hanging fruit, and we make it so that eventually they're like forced. Their hand is forced because they just, it's like, oh my God, like we're the only idiots not doing this, right?
Yeah.
So I think 10,000 medium-sized businesses is probably easier to get than one S&P 500 company.
Right.
So I would I'm thinking, don't push against the boulder, right? Just go around the boulder and just, go after the find where where the people are more receptive, right? And also, I mean, this is the way I think about it, right? So in the UK, I think it's 5% of people, these are the statistics, I don't know if they're accurate or not, but from what I've read in various sources, about 5% of the country owns Bitcoin, right? And so in my head, by the law of large numbers, on average, this may not be true for whatever reason, but 5% of financial directors should own Bitcoin, right? So those are the companies that I'm looking for first, right? Because those guys already understand the asset and whatever. Now I've just got to convince them to put it, and I've got to help them convince the rest of the board. That's a far easier conversation than going to a financial director who thinks that Bitcoin's used by criminals and it's bad for the environment and a Ponzi scheme, right? So I think like we're not huge companies. I mean, we're not HSBC, neither are you guys, right? We've got a limited time, resources, only 24 hours in a day or whatever. Let's be strategic. Let's think, okay, where are we gonna get the biggest bang for our buck and go after those kind of areas. Like the other thing that I think about is the areas. I've actually got a spreadsheet I can share with you guys. It's that kind of areas where I think we'll win. Like, for example, one is online gaming companies, right? They're going to be kind of receptive to this kind of thing. Like and I mean, I hesitate to say this on a Bitcoin show, but like the crypto service providers like Copper, people providing infrastructure, whatever, you kind of approach them and say, hey, why don't you're a business, man. You should have you guys know what Bitcoin is. We know you sell all the rubbish because, your business model relies on it. But you know as well as I do what the real thing is here, right? You should put some of the real thing in your own corporate treasury. Like, I got a whole bunch of ideas that I'm battling to remember now, but they're in the spreadsheet of like, where can we go? And I also think another idea is I don't know if this is a good idea or not, because we might just end up banging our heads against the wall, but so Peter McCormick from What Bitcoin Did. So the Bitcoin technology company, I mean, I hope he doesn't mind me, he won't mind me saying this, but the Bitcoin technology company CEO said that they'll do the Bitcoin employee benefits at their football team, the one that he's got with the Winklevoss brothers have kind of invested in there and whatever. But we were thinking, imagine if we could get like I mean, they're famous in Bitcoin circles, but like an actual big football team to do it, right? Because you kind of want to like blow it up and make it cool and make it like get a whole lot of PR and whatever. So looking for opportunities like that as well might pay off. I mean, coming on, this podcast and others, I get people contacting me like, hey, I saw you on this podcast and we want to do that in our company. Can you help us? And so those are my ideas.
Yeah, with athletes, you've seen some of them taking their salaries in Bitcoin, and one just came out recently talking about how well it's gone for him over the last 3 or 4 years. He stuck to it. I think he's a European soccer or football player. So those case studies, the people that aren't just trying to grab attention, but they're going to commit to it for a number of years. Those are great PR, to your point. Glenn, it was a real pleasure having you on. We look forward to chatting again in the future just about how we're going to be attacking those small and medium-sized businesses that are going to be most agile and most ready to get on board and start protecting their balance sheets.
Definitely, guys. Thanks a lot, man.
Absolutely.
Thanks.
It's another episode of New Foundations. Thanks for listening to this week's episode of the show. A quick reminder that New Foundations is for informational and entertainment purposes, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.